now taking stock of Bharat Forge after the company came out with its Q4 earnings. Standalone earnings for the company were largely in line, and we're to talk more about the company's business environment as well as the quarter gone by, and among the other geopolitical things that we can speak about, we're now joined by Mr. Amit Kalyani, who is the Vice Chairman and Joint Managing Director of Bharat Forge. Mr. Kalyani, good afternoon, sir, and thanks so much for joining in today. I just want to start off first, in this particular quarter, we were expecting that the standalone business, will have roughly flattish growth, but it's maintained its EBITDA margin in a difficult time where there has been a lot of speculations across the globe. So just wanted to start off, if you can just give us a few highlights for this particular quarter, both on standalone as well as the consolidated, and then we'll get into the segmental performance.
Yeah, so I think we had a fairly decent performance in Q4. We had a total revenue of 2,163 crores, which was slightly higher than last quarter. EBITDA grew quite nicely, and margins grew by about 100 basis points to 29.1%. Our PBT was about 494 crores for the quarter. On a full year basis, standalone was about 8,800 crores with the EBITDA of 2,524 crores with a margin of about 28.5%. Again, 100 basis point expansion. Our balance sheet remains strong. We have cash net of loans of almost 1,330 crores. Our ROC was about 18.1%. At a consolidated level, the Q4 revenue was 3,853. This is a little lower than last year because some of the defense orders are lumpy and they happen, it's not every quarter always the same amount. But EBITDA moved higher, margin expansion of about 170 basis points. The consolidated revenue was slightly lower than last year by about 3.5% at about 15,123 crores. But margins increased by about 180 basis points to reach 18.2%. We've secured new business during this year of almost 7,000 crores across all our different business areas. Defense was 5,000 crores and between BFL and JSA was about 2,000 crores. And our total capex for this year was about 750 crores. Our overseas subsidiaries, the EU Aluminium has started stabilizing but given the unfortunate European situation, utilization is not yet at high levels. Our US operations are in the black for Q4 with a recording of profit, a positive EBITDA of 4 crores. And we expect that this year we will have a significantly improved performance. We are already at positive numbers in EBITDA, and we hope that this will translate into positive numbers in PBT as well in the US market. In Europe, we recorded an EBITDA of about 96 crores for the year. Our US operations have substantially reduced their EBITDA loss, and utilization in the US is at about 70%. And we expect that with this whole Make in America, kind of situation, we see a lot of potential going forward. We continue work on cost reduction and restructuring in Europe, and this should show results in the next 3 to 4 months.
Sorry, Mr. Kalyani, if I can just interrupt you and apologize for that. Just want to take forward the export market point with you. Specifically for Europe, what's the current scenario on the ground? Because while for this year you mentioned that the EBITDA margins were roughly 2.5%, they're slightly lower than last year. So on the ground, what's currently happening with demand? Because we've seen a renewed focus on defense as well in Europe for protecting themselves. So what could we expect from Europe in FY26 if you can quantify a little bit?
Right now there's a lot of talk about make defense equipment and systems in Europe. They have to rebuild the entire manufacturing ecosystem for defense in a large way. We see a lot of potential in this. Forgings are an integral part of most defense equipment. So we are definitely going to look at whether we can play a part in this. But right now, if you look at our European subsidiaries, they're largely focused on automotive and commercial vehicle. And both those areas are under some amount of pressure, but they aren't, collapsed or anything like that. So right now, there's a lot of uncertainty because of the continuation of the Ukraine war. the whole US tariff situation, multiple things. So it's very early because nobody seems to know what's happening. If you look at most US and European companies are either saying that they will not give an outlook, or some of the American passenger car companies are saying that they will reduce their outlook. So I think in Europe, if you look at what BMW has said, I think yesterday or day before, they are not changing their outlook. So obviously, some of these companies have more confidence in their ability to manage the situation, as well as potential for European rebound. So I think we have to wait and watch.
And the larger question, of course, is what's happening with US and the tariff specifically impact. Now, I just had a two-part question. Now, roughly 30 to almost 35% of FY24 revenues in the standalone basis were from the US. You also have US manufacturing operations. You reported roughly almost 1,000 crores in revenue there. But sizable will be currently exported from India as of now. Is that the correct assessment?
So our US manufacturing this year should grow by at least 40 to 50%. What I'm talking about is what we manufacture and sell in the US. So that will provide us growth. And I think year after that, also we will have fairly strong growth. We have built a sizable capacity in the US over the last 4 years. Plus we have, added a lot of debottlenecking and, robotics, automation, etc. in our Tennessee plant. So all this put together will allow us to, significantly more than double our output in the US going forward. And that should provide us some amount of, a lot of shielding and a lot of growth opportunities, profitable growth opportunities. And on the products that we make, which we supply to the US, they are across a variety of sectors. They are across passenger car, commercial vehicle, industrial, and many other sectors. So I think some of those sectors will continue doing well, and we should see plenty of opportunities in the medium term.
But Mr. Kalyani, whatever revenues or what's manufactured in India and exported to the US from India, what is the strategy currently for? Because once the tariffs are now come into place, and while there is outlook of FTAs right now, we've already struck one with UK. What is the current environment for you in the short to medium term? Is it that you are passing on the additional cost of tariff directly to your customers right now, or will it be passed on with a lag? Anything that you can give us any outlook on?
No, so look, whatever tariffs, when they come, will be discussed and appropriately tackled with our customers. Most of the competition we have is from outside the US. So either they are from South America, or from Europe, or from China, or wherever. So it's not that there are any competition who is from a non-tariff country. So from that point of view, I think we are in a fairly neutral to advantageous situation.
And so we spoke about, you mentioned about US and the growth that you're expecting 40 to 50% in this year. Anything that you can give us on profitability of export market? Will we see the US markets, come to profitability before the European ones? Anything that you can give color on?
Yeah, I think we should expect the US business to become profitable even before the European. We have got a good management in place, and we've got a good product portfolio. We've got great operations. I think that is working, on track. In Europe, there's a little more uncertainty because of a lot of external dynamics, some internal issues as well. But I think we are on track in both the places.
And so just a word on, the order that you finally won for ATAGs in India. It's a huge order, 6,900 crores, and many congratulations to you for that. It's been a lot of time. It's been in the works for a lot of time. You mentioned that roughly 307 ATAGs machines is what you're going to be supplied. Anything that you can give us for this year? How many would that be? Because I think the last time we had spoken to you, you mentioned that the capacity could be between 10 to 12 in a month. So the order execution could be much faster. If you can just update us on that.
So first we have to have, now the order signing is done, then we have to have FOPM. Then we'll have the whole, quality and acceptance. It's called the FAT, Factory Acceptance Trial. After that, the supplies will start. So within 6 months, I think we should have that in place, and then we can start supplies. Just to be clear, you need to know that our share is 60% of 307.
Understood. So in 6 months, you should be able to show the first product.
Hopefully begin supplies, yes.
Begin. And just the last couple of questions. One on the US Class 8 truck market. Do you think we've seen the April numbers and it's been a substantial 50% fall both on month and YOY. Do you see that largely because of what's happened with the tariffs and people just waiting and watching? Is that your assessment as well? And
that is my assessment because after talking to multiple customers, including some as late as this week, nobody has a feeling that it's going to be a 50% YOY drop. Obviously, everybody's waiting and watching. So let's see.
And just one.
As a company, we're very strong. Okay, we will come out of this shining, and I think we will use this time to restructure operations, reduce costs, develop new products, and be ready for the growth as and when it comes.
And just last question, we've seen the US EPA norms are expected to come in by FY27, and effectively we're expecting some pre-buy in the second half. Have you anything on the ground that you're hearing? Because we've seen one of the chiefs of US EPA come out and say that they will be delaying these green norms. What could be the impact potentially? Would that mean that there would be no pre-buy? What is it that we could expect from this?
There are two elements to the impact of this. One is there is typically a huge cost increase, anywhere between $10,000 to $12,000 or $7,000 to $10,000 a truck. Now, because of that, there's a pre-buy. Typically, what you have is you'll have a year of pre-buy, and then the year after that, there's a big drop. So if that doesn't happen, then maybe you'll have 2 normal years.
And just one final question. What is the estimate for this year in terms of goals essentially for you? One, we've spoken about export per markets and the profitability. The defense ATAGS order will be one of the key ones. Anything except that we should watch out for? That's my last question.
Very simple. We want to continue growing our aerospace business. We want to continue growing our industrial business. We want to reduce the losses in our European business substantially and make our American business profitable. And also our EV business should start looking at, substantially reduced losses and start turning the corner by towards the end of the year. Lastly, our casting business, which is part of the industrial business, I have to compliment them for having delivered a great result in the last 3 years. Since we bought them, I think we've more than doubled our profits, increased our margins substantially, and I think we're on the cusp of significant growth. We have an order book there, which is very substantial, and I think that's going to be a very meaningful and successful acquisition for us in the days to come.
Mr. Kalyani, thanks so much for joining in, giving us a whole host of views on Q4 as well as the demand environment. Best wishes to you for FY26 and look forward to our next conversation.
Thank you so much. Have a nice day. Bye.
Well, that's all the time we have on this edition of very special conversation with Bharat Forge. Stay tuned to NDTV Profit for more.